Fred, thanks for joining us. So how much demand are we seeing coming through for this 15-year bond? Do we have the results of the auction which took place today yet?
No, we don't have the results yet, but from just talking from the market, we did our intelligence and we discovered that there was a bit of demand coming from all cross section of the market, from the banks to the trust funds, as well as insurance companies. There's a bit of demand there, so you're expecting a bit of an oversubscription on this particular issue, knowing clearly it's going to be a very tight one because with the feeling that rates are coming down, everyone wants to get the best at the current moment before the rates go even further lower.
It's pretty much what has been expected, you know, lock in rates before they fall even lower. But your views on the type of yields that we're going to see for this bond, because at last year's auction, which is of course April 2011, when we saw the currency under pressure, inflation rising, yield went to 12.388%, and that was up from around 10.9%. So of course we saw yields ticking higher. Do you expect yields to come in perhaps even below 10.9?
Actually, interestingly, when we check the markets, actually, we got a lot of interest coming from 10.5 all the way to just about 12%. But looking at the market and looking at the big players who are going to participate in this particular issue, we saw the demand spread from about 11% to about 11.75. So before the results are out, our estimation is we are going to see just about 11.35. 11.25 to 11.35 as the average, and probably between 15 to 20 billion as the demand coming through. Yeah. Remember, this is a very, very crucial issue because we have about 21 billion which is maturing this particular month. This week on Monday, we had about 9 billion coming through, and then we have about 12 billion coming through again next Monday. So I think all this money that is maturing for the current papers is going to be chasing the TBs for this particular season, as well as this particular 15-year paper. Now remember also, this 15-year paper is coming after a successful 2-year paper, as well as the 10-year paper, which came about 2 months ago. And I think a couple of the investors that did not get a chance to participate and invest last month, they are trying to be very cautious not to be locked out. Because again, if you get locked out this particular month, you have to wait all the way until next month. And you know, maturities for this particular season, 21 billion coming this month, and another about a similar amount coming at about November. Yeah. So these are heavy maturities until the end of the year.
You talk about, you know, the strong demand that we're likely to see when we see the numbers coming through, perhaps up to 20 billion for this auction. They're looking to raise 15 billion. But overall, I mean, what type of concerns do you think investors are placing on the elections which are still to come and the uncertainty perhaps around that?
Yeah, in fact, there's a bit of concern, but much of the concern on the election, for example, is going to play so much on the equity side. On the fixed income side, there's not so much of that. In fact, if you take an election as a factor, it rates much, much more lower, as opposed to the threats that are posed by inflation, for example. We know that the instability coming from the other side of Asia, Middle East, is much of something to look at. In fact, there was a scare last week. We saw the local prices for the fuel here slightly edged up. So that's a big concern. I think the other concern is going to be what's going to be the central bank style of management. Because we know from June this year to December this year, we have about 69 billion maturing. But we know that from January next year to the end of next year, we have about 140 billion maturing. That's an average of about 10 billion going forward. So one of the biggest concerns the market is looking at is how is central bank going to be able to manage the maturities, heavy maturities coming through, as well as the new program, the 125 billion per year, which they're trying to borrow. Then thirdly, I think the other issue is going to be, other than the interest rates and inflation, and obviously it's going to be how the market is going to be able to apportion between investment in equities as well as in the bonds. As you know that most funds in the last 8 months have been playing very low on the equity side. But you've seen in the last couple of weeks, there's a bit of interest coming through back in equities. So maybe the concern for the banks is going to be maybe the level playing field is going to change and tilt towards those funds having a lot of liquidity as they try to shift and balance between equity portfolios and bond portfolios.
Yeah.
But otherwise, election is going to be a factor, but not a major factor.
When we're talking about appetite for infrastructure bonds, long-dated 15-year infrastructure bonds for Kenya, East Africa's largest economy, what type of appetite are you expecting or are you seeing from the international community? Because, for example, we're just going to be talking about Zambia's Eurobond, which was issued last week. Strong appetite coming through from international investors. Are you seeing that same appetite for Kenyan long-dated debt?
No. It's an interesting market if you look at our market. If you look at the history in the last 25 years, the participation on the foreign investor on the fixed income securities, both on the primary, those are TBs and the bonds on the primary section, as well as on the secondary market, has been very, very low. And I think there are many factors explain that because our interest rates in this region are the lowest. But more importantly, we have a bit of foreign investors coming to play on the primary auction most of the time. Then they come in the secondary market, they offload, and then they take off. They wait again for the primary auction. But if I look at the percentages, you're talking about 10%. So with all these risks coming with this inflation, interest rates play, I think the participation from the foreign investors is going to still be very low.
Yeah.
I don't think they're going to be very much attracted more now that even interest rates are much more lower now.
Fred, great to have you with us. Thank you for your insights. We'll wait for the outcome of the bond auction, which took place today. Fred Mweni, Managing Director at Tsavo Securities.